Hello and good evening, everyone. Welcome to Paytm Money Talk. And the topic for discussion today is investing on India's growth through transportation and logistic fund. So this is a very interesting topic. As you know, that this is a emerging sector, emerging theme. As India is growing, the transportation and logistics is also growing. Now, when you talk about vehicle density, transportation sector, automobile sector, it's one of the lowest in the world. As per data, out of 1,000 population, we have got four-wheeler densities around 40 vehicles per 1,000 people. In case of Italy, which has got the highest number, it's around 650. Now, when you talk about two-wheelers ownership in India, it's around 110 against 260 in case of Southeast Asia, South Asia. So yes, we have got lots of scope to cover up, lots of scope to grow, and we are going to talk about that. And another very important sector is, of course, e-commerce. It's growing massively in last few years, along with it, warehousing and all different kind of peripheral businesses. So I'm Neeraj Gogoi, your host for the talk today, and this talk is powered by Paytm Money. Okay, before I start, let me quickly introduce what the Paytm Money Talk is all about. This is a kind of a show where we try to invite, specialists from different areas, different field, from investing, mainly from AMCs, and then introduce new ideas, concept, and instrument in the investing world. So if you are somebody looking forward for, new techniques, new methods, or new tools to invest, and improve your investing skill, this show is definitely for you. And today in this process we have got the fund manager, Mr. Sachin Trivedi. He is basically an equity research analyst and a fund manager with more than 22 years of experience in the field. Academically, he is a MBA and a CFA, and he is with UTI AMC for more than 22 years. So it's a great pleasure to have Sachin here today. Sachin, welcome.
Thank you. Thank you for inviting me to this platform.
It's a great to have you here today, Sachin, and because we are going to talk about a very interesting, exciting theme. And I'm sure as the economy progresses, we are talking about India becoming a $5 trillion economy, and we have been talking that India is the brightest spot in the whole world today economically. You have got lots of things to talk about, right? And guide our investors how we can create wealth through this particular theme. So, Sachin, the first thing first, we have seen that, last almost 1.5 years, the market was correcting. And for last 1 month, we have seen market, bouncing back. We are in the middle of the earnings season. So what do you think, where the market is heading towards? When you talk to the experts, many experts says the very bullish things, the market is going to make a new high probably. And of course, Bank Nifty is going to make a new high. Nifty is definitely going to make a new high. But the question is when, right? It's sooner or later. So what do you think about the market? Can you guide us on that?
Sure. So let me try to give you a different perspective. So I agree with the most of the experts who are sharing this view that India is going to go touch new highs. But I will reserve it for a medium term. But actually, let's face the reality. What's the economic data showing today? And the economic data has already started to show a good amount of weakness as far as your IIP or the manufacturing data, or you look around various economic indicators, the high frequency indicators. They're already showing some sign of the weakening of the growth, and I guess this is a combination of two or three things, which is the monetary action, which not just the Federal Reserve in US is taking, But the monetary action back home in India, which the Reserve Bank of India has taken, and some side of some sign of that has already started to show up in the economic activity. Plus, on top of that, we all know, like I said, that the Federal Reserve and across the various central banks are taking this action. So the slowdown in the economic activity is started to appear, which is also quite relevant from market perspective, because if you look at the larger market where Nifty companies draw their earnings, good amount of earning, maybe 25-30% plus amount of earning actually also comes from export or export linked industries are concerned. So I'm just trying to give some perspective to your listener that they should brace themselves for such kind of weakness in the reported numbers, which may actually play out possibly. But that does not mean that market should definitely be reacting negative to that, because to an extent some of it is already been discussed for a while, and probably also been factored in by the market, right? So, having said that, one of the question or the hint that you have dropped, that probably why the markets are doing so well despite all these economists and the news being in the picture, because in near term market is definitely keeping sight of how the earning performance have been. If
Mhm.
you look at the earning performance in the Q4, as of now, we can call it mixed, but some if you look at from the margin perspective, if you look at from the top line perspective, it's a mixed bag, but maybe a tilt is more towards a positive surprise, and which is where I think market is also rightfully reacting positive to these numbers as well. End of the day, we all know, Neeraj, markets are slave of earnings, and which is what we will keep reacting to that. And if they surprise us positively, markets will or the stock prices will keep tend to go up. In long term, I like I said, I agree with the experts, because there are a lot of structural changes which our successive governments have done, and we have faced difficult times. And just these difficult times are nothing but we have seen whole host of NBFC consolidation. That was one of the toughest phase that we have gone through. We have seen maybe the demon. We have seen this complete pandemic related changes. All those factors have actually gone through, and which is where our earnings, and maybe the big one, actually the two big factors which have played out in last 5 years is the banking balance sheet cleanup, which was the required. That's now going to play as a fundamental factor from India's perspective. And the other important factor is our corporates have also deleveraged themselves. So from here on, if there is a growth, we are in the trajectory where both the pillars can start to participate, and which is where I will not participate in the numbers that you just mentioned, but on a medium to long term perspective, we are on a growth trajectory, and therefore we should not lose sight of this in light of what may from some of the bad or negative economic news probably may which may hit us.
Correct. And in fact, when you are talking about earning surprises, today we have got State Bank of India declaring their result, Q4 result. And I think this is a very, very huge positive surprise, isn't it? So do you think this result is going to be replicated in 2024 as well, 25? Uh,
So I can't talk about stocks that you know very well,
well, I'm
Neeraj,
talking
but
about banking sector as a whole. Even private
yes.
banking, they have also declared very good result.
Yes.
Yeah.
So, yeah, to be just to be right. So, where was the pain in past? Where did the banking sector as a whole has given us a negative surprise? And this was for back to back. If you leave aside, let's say 22, 23, you've seen big pain in the entire banking system, wherein the gross NPA were in excess of let's say 10% plus, which means that for the system net worth was almost negligible. Right from there, now all banks' balance sheets are in very good shape. they have already taken up that NPA related provisions. So, which is where what I was referring to, where can the negative surprises can be? Negative surprises can be if there is the what is the banking business? Banking business is simply take the deposit at a lower cost and lend it to somebody else. But the trick here is that you should be able to recover back your money. That's the trick, right?
Correct.
I think that maybe if you were to say whatever the big risk to the balance sheets probably has played out in last decade and especially in last 5 years, which is where corrective action has been taken. And if you look at the balance sheet composition or the loan book composition of large private sector banks or large public sector banks, I think good amount of diversification is done. If you see, most of their balance sheets are largely retail oriented, and which is where the risk element is significantly been diversified. And the big NPA surprises which have played out in last 5 or 6 years, the chances of them actually playing out because of the composition of book is less, and which is where I think if they follow right lending practices, I think we should keep getting healthy outcomes from the banking
Wonderful.
players as well.
Wonderful. Now, coming to today's topic, we're talking about transportation and logistics.
Yes.
Can you broadly tell us what are the different sectors, what are the different segments, parts, and what is the whole prospect we are talking about in this particular sector?
Sure. If you allow me, I will just try to share
Yeah,
the presentation. Is the slide visible? So I'll
yeah,
just keep few slides so your listeners can actually also connect themselves as to
absolutely.
how are we where is this fund is actually invested in, right? Or where is the transport is the transportation and logistics theme per se is. So transportation and logistics theme, the big component of the fund usually is auto and auto ancillaries. Now, what is these auto OEMs? These auto OEMs are nothing but the Marutis of the world, the Bajaj Auto, or the Eicher Motor, which is the owner of Royal Enfield as a brand, or let's say from foreign context, it's the Tesla of the world or Toyota of the world. They are the auto OEMs. They are the ones from whom we buy the cars, right? But these auto OEMs are the ones who actually are not the one who is producing every component of the car. They just design the car and maybe manufacture only few components of them, but actually there is whole host of ecosystem which is what we call as the auto ancillaries. So these auto ancillaries are beneficiaries of this growth in the auto OEM, the penetration, the under penetration part, which you were referring in your introductory part. If that penetration keeps going up, both the OEMs, the auto OEMs, as well as the auto ancillaries are beneficiary of that. Plus, these auto ancillaries not just participate in domestic market, but they do participate in the value chain of some of the international OEMs as well. Right. So this is about the OEM, auto OEM, and auto ancillary, which is the big piece. Then there is logistics services where the fund also invest in. So these services are airline or any kind of services, the airline services or airport services, courier or logistics services, or railway, or the container based railway, or even the port and the other related lines as well. And to put it very simply, a company which is in the food delivery system, right? We may call them the Zomatos of the world or the Swiggies of the world. We will call them, maybe in the common parlance, we will say these are food delivery companies. But actually, if you think about it, they are picking an order from one person, taking this order to a hotel, and then actually coming and delivering. So they are actually, from a true parlance, if you see it, they are also a logistics company, and they can replicate the same services using the same infrastructure for various other delivery purposes as well. So maybe these are the type of companies where we look to invest in these funds.
Okay, great. Uh, Okay. So, how do you see the growth prospect of these particular sectors? Of course, they are very connected to our economy, right? As the economy grows, automobile sectors, you talk about Tata Motors, you talk about Eichers, you talk about Ashok Leyland, Maruti, all these companies, they are very closely connected. So, how do you see the growth in these particular sectors in the coming time?
Sure. So again, let me try to share a slide. I'll just keep the slides in background so your actually listeners can also make some sense of these numbers, right? So
Yeah.
uh, this is, if I were to put it auto as a sector, right? This is a sector which is if this is a sector which is let's say a passenger vehicle, which is a seven
Mm-hmm.
8% growth industry. Then there is a two-wheeler, which is 10-11% growth industry,
Mm-hmm.
right? This is just the volume growth that I'm referring to.
Hmm.
This industry has seen some bit of a challenge in last 3 or 4 years, and during our conversation, we will touch upon that. And if you see today, despite so maybe what has happened with the some of the stocks and the underlying funds who are owning these stocks, but this industry has seen this industry which is supposed to be high single digit to double digit volume growth industry. And mind you, there are very few industries which have this potential of double digit kind of a growth in volume terms. Today maybe you pick up a consumer phase or any other, very few industry have this potential, because maybe penetration level is already picked up materially, but this sector holds a potential for penetration, which is where the sector has a long term potential for growth from medium to long term perspective. uh, but the true challenge this industry has faced is basically this, right? Maybe this is more numerical representation which I'm showing
Mm-hmm.
you, which the industry has faced, wherein let's say from 19 to 23, if you and your viewers can focus on the last column, which is 19 to 23 kind of a number, right?
Correct.
This is what is telling you the pain which the industry has actually seen. So industry which is holding a potential for a double digit kind of a growth has actually, and this is including FY23, which has seen a decent growth, right? So this industry has faced significant challenges, but like I was showing in the previous slide, if you draw a long term line, then this industry should go back to its average
Mm-hmm.
growth run rate, which is let's say high single digit to double digit kind of a volume growth. And therefore, from medium term perspective, this industry holds a good volume growth prospect. Why this should happen? Why it didn't happen in 19 to 23? Because simply, if I were to, without getting into too many complications, simply because of multiple regulatory changes, the cost has increased. So now, on an average, if you go, if any one of us go and check the prices of a basic vehicle, let's say as simple as Hero Honda Splendor, what was the cost 5 years back versus what is the cost today? There is at least 40% inflation which has happened in the system. Across the various product categories, the range is there, but there is a significant cost inflation which has happened to the end consumers. But at the same time, because the references which I was giving, that whole NBFC issue, then this challenge that we have faced in terms of COVID, the nominal income growth for per capita, if I were to say the per capita nominal income growth, has been quite muted as far as our country is concerned. So, if I were to take you back, let's say from FY 11, 12, 13, 14, 15, if you look at that period, our nominal growth rate for at the per capita level for India was close to 10, 11%. And on the cost increases for the vehicle was in the range of 2 to 3%. Maybe let's take the number of 3%. So the consumers were all enjoying this gap of 6 to 7%. So your cost is going up by 2 3%, your income is going up by 10%. So you were enjoying the 6 7% gap. But what has happened in last 3 or 4 years, which is the period between 19 to 23, your cost inflation has been between 9% to 9% to 12% on CAGR basis, right? So which is what it makes for the 40% kind of a inflation.
Mhm.
That's how the cost has gone up. But we all know the nominal income growth has been between 6 to 7% CAGR. So now the entire metrics has reversed. Your cost is going up much more than what the income is growing, which is where we've seen this faltered volume growth as far as industry is concerned. But from here on, what
Mhm.
we are expecting, and we all know, if you pick up any economic report, they are suggesting that the income, nominal income growth should be double digit. If that be the case, the cost inflation, because most of the regulatory changes are behind us, cost inflation should go back to the era of 1 decade back, where this cost inflation was just 2-3%. But the
Mhm.
income would grow healthy double digit, in which case we back to the old economics, and therefore we believe that the volume growth should be back to the earlier trajectory, the long term trajectory, because
One
underlying penetrations are still low.
fantastic. I think very nicely explained this point. I think conceptually also, this is very, very interesting to understand. Second thing, again, coming back to ancillary sector, you mentioned about this is one of the very important sector. So can you give us a broad perspective, which other companies, which other industries they come into, and how their growth is linked, and how your fund is going to make investment in those particular sector?
Sure. Let me try to pull a slide on the auto ancillary.
Yeah.
Sorry if I can, unless I have skipped a slide there. Yeah. So this slide actually throws some number about the auto ancillary as a sector. But actually, like I said, auto ancillaries. So there are few things you in this sector you don't see the sharp downtrend that we have seen in auto OEM. There is a reason for that, right?
Hmm.
So let me try to explain this auto ancillary in the parallels of why and how they benefit from any regulatory change which affects OEMs, but maybe auto ancillaries are partly beneficiary of that, right? So now, if there is, let's say, 10 year back in any car, get having, let's say, airbag was a luxury.
Hmm.
Today, if you see any car, it's basically a compulsion. You see, at least at the driver end, there is definitely a airbag, and even the co-passenger on the sitting on the front seat, there is a airbag, right? So this is one regulatory change. Similarly, there are conveniences which people are looking for, right? No longer we roll down our glasses, the side glasses using a handle, but it's done with a touch of a button, right? So these are the changes which keeps happening. So from safety angle, safety perspective, government has introduced multiple regulatory changes which the OEMs have to effect it. Consumers get benefited out of it, but then there is a cost inflation. But who benefits out of this entire proposition is the one who can offer this solution to the OEMs at a cheaper rate, which is what where the auto ancillaries actually kick in. So there are multiple changes, be it the infotainment system. Earlier we used to fix it. You buy a car and then go to a garage and get it fixed, right? Infotainment system. Today it is inbuilt. Or even the regulatory changes like a LED light in the front. Earlier they were the halogen lights. Now there are LED lights. There are whole of so these small changes that you see in the car. There is this auto ancillary as a sector which actually supports the OEM, and that's where they benefit. And maybe they use the same scale, same technology to support some of the international OEMs as well, or learn from them and help the domestic OEMs, which is where this actually the sector is important. This sector benefits out of it. Yes, this sector has faced some challenges because globally as well, there was a degrowth in OEM volume with the India as well. So they have not degrown or not faced as much challenges as OEMs are concerned, but they've benefited from these regulatory changes. So which is where every so even let's say if we were to talk about auto sector converting into let's say EV mechanism, which is the batteries are used, even there they have a big role to play, and that's where this space is important. Yes, they have faced some profitable the pressure on margins because the inflation that we have seen in the metal prices, but then again the mechanism of pass through exists in this sector, and this sector over a period of time also makes the same amount of money because of the underlying mechanism is the OEM and the ancillaries follows. So this sector is also well placed. Just to summarize on this sector, not just they benefit from the volume growth in India, but they benefit from the volume growth in some of the international OEMs as well. Plus, they are beneficiary of the regulatory changes which keeps taking place over a period of time. So this is how they benefit.
Correct. Now, in fact, what we have seen in last decade, almost, tremendous, massive change in the road infrastructures. We have seen, big roads, highways are being built, expressways ways are being built, and the government, every budget, government allocated huge amount of money towards this infrastructure development. So, do you think this is again going to contribute automobile that ancillary OEM manufacturers as well?
Yes, if you think about it, in last 2 decades, if the government has built more airports, if the
Hmm.
government has built better roads, if the government has built more, let's say, the ports, it has all resulted in if the connectivity is better, not just that we want to travel more, even the commerce improves, right?
Correct.
So at not just in India but anywhere outside as well. If you see, this is the same case. Improved infrastructure results in more economic activity because inherently, let's say from Mumbai to Pune, because I stay here, I'll take that example. If it amounts to let's say 5 hours travel,
Yes,
but if
six
it is
hours.
cut down 6 hours, yeah. But if it is cut down to 3 hours, maybe I would want to travel more frequently, right? And there will be many people who will say Bombay is unaffordable, let me go and stay there, and I am happy to travel. And just to add, if the government also adds a better rail line and we can travel in 2 hours, maybe that's also a preferred option. So the nutshell, the point I'm trying to make here is at any point in time, improved infrastructure results in long term in more and more usage of automobile. But not just that, even creation of these infrastructure needs more of a commercial vehicle, right? And that's how the opportunity size, and which is where this fund also benefits, because although commercial sector is more cyclical in nature, but this is also one very large sector, because every commercial vehicle, if you use it more, obviously you need one tractor, one CV or multiple tractors, and you travel more, you need more tires, right? You need
Hmm.
multiple other things. So yes, this sector definitely benefits out of improved infrastructure.
Now, one of the behavioral change that we have seen in last few years is, our purchasing behavior. We used to go to the shops and buy things. Now we use Amazon, Flipkart, and all online. That e-commerce has boomed like anything. Even in the rural places, you go any remote places, you will see that delivery guy on the bike traveling. And I was shocked to see that they're still going there and delivering their goods. Now, when you talk about this sector booming, so what are the opportunities to invest comes in that particular area? No doubt e-commerce platforms that we have. Apart from that, warehousing, anything else that you can enlighten us on?
Sure, sure. So, see, the areas of investment, let me first explain the opportunity, and then
Hmm.
also we will talk about the areas there we can look to invest, right? So, if you see in the on your screen, what is the size of opportunity? If you look at this market, which was, let's say, 216 billion size in India, is
Hmm.
expected to grow at 9% CAGR and expected to reach, let's say, $365 billion. But more importantly than that, what is important is if I were to give you in context today, right, most of this opportunity, if you see the truckers, right, let's say people owning less than 5 truck, it's the large proportion of the ownership. More than 80%, I can say comfortably, more than 80% of the population will be owner owning less than 5 trucks. These are unorganized players, but gradually with introduction of GST, more and more companies, because there is a e-way bill requirement, everything is going organized way. So there are these organized people who effectively were working at a higher cost, but with scale they will come back to more, become more efficient and compliant and more reliable to the companies, to the individuals, right? So this size of opportunity for organized people where we can invest as an investor is expected to grow at a 30% plus, which is there on the right hand side of the chart which I am indicating. So that's the pie, that's the size of opportunity which we see is going to improve significant and multiple. And this is not just a story up to 2026, but this is going to last even beyond that. So
Mm-hmm.
that's the one, actually, the area which I wanted to just highlight before we get into where all, like you said, e-commerce, right? Very important, because before 2013-14, this market was not even in existence. Today it has become a significant market. And simple, there are simple economics for that. If I want to deliver one piece from, let's say, sitting in BKC to your office, maybe earlier the cost of doing that was even either I have to come or I have to send my office boy, or even if somebody is willing to come, maybe the cost was, let's say, 300-400 rupees. But today there is a third party provider who can deliver the same for 50 or 60 rupees. So the activity will keep improving, right? And we are just thinking from article to be delivered from my office to your office. But this has made many people do more business sitting in remote locations. So sitting in Bombay, I can order, they can deliver the goods to me sitting in remote location. So one, the sense I'm giving is not just the same pie, but because the cost of doing operation has come down, the e-commerce or the overall business has is likely to increase multifold. Now just imagine, let me take it to the different size, because the government is talking about or basically the investments are already done, and maybe in matter of 1 to 2 year, the dedicated freight corridor, which the term you and your listeners must have heard, the big rail infrastructure which the government is now keeping under or constructing. Let's say because of that, just the delivery time. So earlier, let's say from Delhi to Bombay, if you want to deliver a good, it used to take 36 to maybe 48 hours, and the exporter is not even sure whether his container will reach on time, and therefore he will lose the container. And if the you don't get the berth at the port, maybe you lose the entire consignment and you lose the order. So if you don't have visibility, you will not do the export. But today, if because of this infrastructure, you are sure that if I load, I know the train will leave at specific time, and therefore I can deliver the goods to the port at specific time, maybe in 24 hours or less than that. Therefore a ship which is waiting will for sure get my container, and I can tell somebody who is sitting in Dubai or any other place that I will send you my assignment in maybe, let's say, a 15 days time, which includes the manufacturing time. Let's say 2 years back I was not able to do the business, today I am able to do the business. So the opportunity size even there increases, more ports come, more travels, more rail travel will take place from the container perspective, and therefore that's the area of opportunity which exists. Now the third piece, which is that most of the companies, because of the inefficiencies which were existing in the system, have kept all the logistics activity with themselves. They were
Mm-hmm.
running inefficiently because they did not have the reliable partners to execute. Today the opportunities are existing wherein players who's willing to take this responsibility for the companies at a cost lower than at which the company can execute, and they are one who are actually maybe the we call it them 3PL activities. they are the ones who are actually improving or increasing the opportunity size multifold. So companies are more gradually becoming more and more comfortable giving business to them. So that's another area of opportunity as far as logistics is concerned. Then there are, let's say, you need a phone or a laptop.
Hmm.
Maybe a player like Blue Dart can actually come and deliver in over a period of time. And there are whole host of other such services which are actually coming in place. So that's the area of opportunity we are looking for to invest in this fund.
Wonderful. Now let's talk about from the investment point of view. As we said, yes, we are absolutely bullish. We are optimistic about our economy doing well. Different sectors to invest. All different sectors. So when you talk about transportation and logistics, ideally, how much of my portfolio should be allocated towards this particular theme as an investor?
Okay, so how I will say is that, see, remember, this is the crux of your allocation should always go towards diversified fund. There is no doubt about it. And because these are sectoral funds, what we always tell our investors that your overall exposure to the sectoral fund should not be more than, let's say, a 15% kind of exposure.
Correct.
Now, within this piece, I will say, because Sachin Trivedi, maybe you are asking a hotel owner whether this food is better or the other food is better, because I will always promote my food. So the still, I would what I will say is that just keep in mind that because of the growth dynamics I have already just laid down, I think from medium term perspective, this is the fund where you can actually, from the 16% pie, you can allocate maybe good chunk of that pie towards this. Or maybe if you find at best two funds, allocate, I mean to say, the two sectors, maybe you can allocate just between equally between the two sectors. So, but overall exposure to the sectoral fund should not be more than 15%, because remember, all your viewers also must be aware of the fact that these are end of the day sector funds and tend to have more volatility in their earnings nature. We have just experienced one, just let me share one slide. We have just
Mhm.
experienced one volatility in the sector just in past, that's between 19 to 13, right? Just let me show you that slide.
Correct.
Maybe, and that's the reason why we are bullish about. So maybe this is a slide, this is just the, sorry, uh, take time. Yeah, is this EBITDA of major listed OEM is visible?
Yes, absolutely.
So this is the inherent nature of the sectoral fund, because let's say between 14 to 19, the EBITDA of some of these listed OEM which were growing at 18% CAGR, they certainly started falling because the volumes did come, and it has actually resulted in a decline of 11% CAGR, right? These are actual number for select OEMs, but this tells you the volatility nature, and which is where I'm saying that sectoral allocation should be limited. At this point in time, we see the reversal to these numbers, which is why we are bullish, but all within 15%.
Yeah. And what should be the ideally holding period, minimum holding period, investment period?
Yes. So if you see from these numbers itself are suggesting you, right, when the
Hmm.
upcycle takes place, this is upcycle taking place for 2 or 3 or 4 years. And similarly, the down cycle also plays out for 3 or 4 years. So we are just going, now we have already passed through FY23. So maybe 1 year is already passed from that perspective. But maybe if your investors are thinking or looking to invest in this fund, they should look to invest from, let's say, medium term perspective, which is from 2 to 3 year perspective is what they should look to invest, because this chart itself is telling you how long the cycles go up and down, right? So that's how I will recommend the investors to approach this fund from.
Correct. In fact, we have got lots of viewers today. In fact, I'm sure they have got their questions in their mind and would like to ask the questions to you. So,
Sure.
request all the viewers that if you have got any questions, please feel free. Go ahead, type your question in the chat box, and Sachin would love to answer your questions. Now, Sachin, we have spoken about the opportunities. of course, undoubtedly, massive opportunities in front of us in this particular team, in this particular sector. So, what are the risk factors? Of course, we know that India is going to do very well. We are all, bullish kind of things, bright kind of things, but still things might go wrong, right? Sometimes. So, what are the risk factors do you think in this particular team that might come across?
Sure. See, I think the underlying risk, which is more generic in nature, which is
Mm-hmm.
what we have just seen. So maybe pandemic was one form of it. I will not refer to pandemic, but I will focus attention what pandemic has done to the people, right? If there is
Mm-hmm.
a sharp slowdown, so I'm not worried about, let's say, a small blip in the growth that we've already seen or may see. But if there is a sharp slowdown in the economic activity, which will again result in the problem area, which is your nominal income growth was muted for last 3 or 4 years. If that exists, if that actually because of the sharp slowdown, if the confidence goes down and therefore ability or the income generation slows down, that will result in some sort of a pain point for the sector, because end of the day, remember the metrics that I spoke about. It was the, let's say, high double, or say early double digit kind of a nominal income growth which is required for the volumes to go back. If there is a dent to that story, a significant dent to that story is a risk factor. At this point in time, from India's perspective, I am not so much worried, because we have two fundamental pillars, which I have just said. Our banking sector is healthy, our corporates are healthy, and
Mm-hmm.
we have all other metrics which we keep talking about. How our population is stacked up there, I'm not worried from long term perspective, but any sharp slowdown can actually derail the story for 1.5 year.
Okay, okay, cool. Now, Sachin, you are fund manager for your fund, UTI, Transportation and Logistics Fund. And when I saw that report, you have been doing very nice, very well, much better, right? So can you just guide us, our investors, about how you have been performing in last few years, probably last few, so that we get an idea, and how do you think that this kind of return that you have generated, that you are going to maintain in the coming years as well?
So our philosophy as far as the fund is concerned, so last year we given 17% return as far as
Mm-hmm.
in that range. We can share those precise number with you. But what I can say is that where I am confident about the style or maintaining that long term trajectory that we have been maintaining versus our index, right? It's a sector fund. So end of the day, the underlying themes which will play out in the sector will obviously result in the fund performance. But one confidence which I can give your investors from investment style perspective is that our preferences are towards the companies which generate cash flows and have the potential to return to generate healthy return ratios. Because in absence of that, we are not the one who are just chasing growth at any cost. Because see, stock market is actually a combination of cash flows and the stories. If I just blindly rely on stories and don't pay attention to the cash flows and return ratios, then that's actually a tricky area. We stick to the core style of looking or investing in the companies which generate healthy cash flows, and or basically and they are also generating the healthy return ratios. The only exception that we draw here is that, let's say, a company, because this sector will the nature of the sector is also slightly cyclical, right? The
Mm-hmm.
companies which have demonstrated long term potential to generate healthy cash flows and return ratios, but because of the sectoral nature, there is a blip in the volume and the companies are facing temporary glitches. But we are very confident because of the nature of the business and the market position which the companies hold. We are confident that they will go back to their old potential. We will invest in them. But otherwise, as a fund manager, as a house, I can talk more about myself as well as even as a house. that we are not the one who are just solely relying on the stories near term piece, but we focus on long term, and we focus on the quality of the companies.
Wonderful. So again, I there are some comments, very positive comments on Deepak Mehta. Very convincing. Thank you. So again, I request viewers, if you have got some questions in your mind, please feel free. Go ahead, type your question in the chat box. Now, coming to talk about investment universe for your fund, like what is a mix, like large cap, mid cap, small cap? What is a mix of companies that you have in your fund?
Okay, so let me show you the top holding, which will give you some
Yeah.
sense as to where we invest. Yeah, is it visible to
Yeah.
you?
Yes. Yes.
Yeah. So actually, this is a mix. It's a combination. So as you can see, most of the auto OEMs, or the most of the names, are actually the large cap names. But since the unique nature of this company, this fund is basically we invest in auto OEMs, which
Hmm.
are inherently large cap in nature, because Maruti is Maruti, Mahindra is Mahindra. They don't actually need capital. They hold a good chunk of market position, or the market share, and therefore they're big and they're large cap companies. But the good part is that this fund also invest in the logistics and also invest in the auto OEMs, and a good chunk of these companies are also mid to small cap. So this gives you a flavor of where we invest in. If you are asking me from the perspective is that how much we can scale up the fund based on the volumes in the market. I think this fund can scale up significantly, because scaling up by that mean that if you give me more money, how much more I can keep deploying. Because of the nature of this fund, because there are multiple companies in this space, and like you can see that the top 10 holding is just 70%. And if you imagine, we can keep deploying more and more and more capital in these companies. So it's a quite a scalable fund. The style, it's although it's a sector fund, so you I can't call it a style, but we have the liberty to invest in large cap, mid cap, and small cap across the range. Obviously, we are always selective and invest in the companies which we like from bottom up perspective.
Okay. Now, when you are showing me the top holdings of your fund, the question that comes to my mind as an investor is, so I can go and invest buy Maruti Suzuki. I can go and buy Tata Motors, Mahindra and Mahindra, Bajaj Auto myself, right? So instead of buying those stocks directly, why should I be investing through a fund? What is the benefit? What is the advantage of investing through a fund instead of buying a stock directly? Because nowadays people have got access to all the holdings of the funds, right?
Yeah. No, it's a fair point that what do we as a fund house we offer to the investor rather than investing themselves? Obviously, it the plain simple answer is the effort that you yourself have to take in terms of when to get in, when to get out. There are cost
Mhm.
involved in this, versus you focus on what you do the best. I focus on what I do the best. So the basic simple old economic metrics, that efficiencies are delivered when we operate on the areas where we have the skill set. So that's one plain simple answer, because when to enter Maruti, when to exit Maruti, how much to hold Maruti or Mahindra and Mahindra, closely track them, right? That I think we have this we because we closely follow them, we execute it, and that's what our profession is all about. And remember, from let's say even in my fund itself, if I hold 33, 34 companies, just a sector fund, the depth to which we can go, maybe all investors may not have the ability to track so many companies. Maybe you can go
Correct.
and pick up three or four or five companies. They will give you some deliveries. But remember, in like I said, that the potential which exists in one company over the other, and those multi-baggers that we can pick up is where I think the investors run a risk of losing out if he is not closely following the sector.
Correct. Now, I think, as you said, for again, if somebody is new to investing, relatively new, for him directly buying a stock, it's very, very tricky job. It needs lots of skill, lots of research, and then as you said, entry exit has to be correct. Even buying Maruti for that or Tata Motors, may not make any difference to you if you do not have the skill set. So yes, it's always better to invest through a fund which has been doing very well, and which is managed by very experienced fund managers. And I think that's the whole thing. Now again, can you tell us about a little bit about the expense ratios and all, and also can give us the your closing comment on the whole investment avenue, on the whole particular theme, your advice, final advice to our listeners, viewers.
Sure. So I think if I'm not wrong, I think expense ratio is around, which my colleague will share. It's around 2.1% on regular. Just 2.1. Yeah, it's 2.1 is the expense ratio for the fund. Yeah, sorry, it's 2.38 for the fund for the regular,
Mhm.
and for direct guys it is 1.09%.
Okay.
So that's the expense ratio. But just to summarize why investors should look at this point in time to invest in. I will summarize that this in India, although we see lots of traffic on our road, but the reality is that the penetration level for car is still less than three,
Mhm.
versus let's say a close to 20% number in China, close to a 50% number in US. So as our incomes improve, right, as India's per capita income goes up, our penetration levels will go up significantly. Maybe there
Mhm.
is no scope in city like Bombay, Delhi, but there is a huge, huge scope outside these cities, and that's where this sector holds a lot of potential for future growth. This sector has actually seen, so this sector has seen, let's say, high single digit to double digit volume growth. On top of that, there is this ASP increase or the realization increase which keeps happening in this sector, right? So this sector, which is a high single digit to early double digit volume growth industry, has seen a blip in the volume, and volumes have gone down in last 3 or 4 years because the cost inflation, because of multiple regulatory changes which have taken place. The cost of the vehicle has gone up significantly, but the incomes have not kept the pace. From
Mhm.
here on, we are expecting that the income should pick up, the cost should go back to
Mhm.
the normal curve of 2-3%, and therefore the volume should go back to the trajectory. And in medium term, the volume growth should be a decent volume growth as far as sectors is concerned. But the other important thing from the sector's perspective or the fund's perspective is that all these companies have seen significant cost inflation which they had to absorb, but
Mhm.
over a period of time they will pass on all these costs to the end customer, and which is where they will go back to their earlier profit levels, right? Earlier profit margins. So not just that the sector will see volume growth, the sector will also see significant improvement in the profitability. A combination of that will result in a decent, healthy, good profitability growth for the sector. And keeping sight of this, I would urge investors to evaluate this sector, and which is evaluate this sector from a medium term perspective.
Wonderful. It's really lovely talking to you, Sachin. I'm sure our viewers today benefited tremendously from the insights from what you have told us. And I would like to thank you and also all our viewers for participating, spending their time with us today, and request viewers to participate in our futures program as well. We keep coming on again and again. regularly organizing this kind of events. So please do participate. And with that, I'd like to close that session. Sachin, thank you so much for being with us. Thank you.
Thank you, Neeraj. Thank you, all your viewers. And it was a fantastic session to explain this. And thanks for inviting.
Yes, thank you so much. Bye bye.
Thank you. Bye bye.